My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service. I've worked thousands of IRS cases, and I get calls all the time, and people ask me, do I apply for an IRS hardship? I can't pay my IRS bill. How does that process all work? So let me give you the short and skinny. No, you don't apply for it. Actually, you have to call IRS. IRS sends out a series of notices, and if you don't respond to them, the IRS is eventually going to take action. They're either going to levy, take your wages, file liens, take your passport, blah, 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 blah. Well, some people say, hey, I don't have any money, but I've heard about this hardship or this uncollectible program. How do I make that work? Well, you have to initiate the call to IRS. That's how you get put in an IRS hardship. It's actually called currently non-collectible. I've probably put 60% of my inventory at IRS into a currently non-collectible. That's because people can't pay the debt. So how does that work? Well, if you owe a lot of money, don't call IRS yourself. You're asking for trouble. If you owe over 75, 80,000, don't call them. They're going to give you the runaround at that dollar amount. But if you owe under, you're going to have to, first of all, download Form 433F. That's the IRS Form 433F. That's the financial statement the service uses. If you're with a revenue officer, don't give them nothing. You should call me. The IRS uses Form 433A, the local revenue officer. But if you're going to give them the 433F, IRS is going to take that, download it. IRS is going to ask for your bank statements. They're going to want to know where your check's going, and they're going to want to know how much money you make every month and your expenses. And then they're also going to want to know your assets. IRS has a formula, an internal formula on how to put you in hardship. So here's what you have to know. IRS will look to see what the value of your assets are. If there's no liquidity, it's not a big deal. You can even have a home with equity. IRS will still put you in hardship. What IRS is looking at is your income versus your current expenses. What everyone needs to know is IRS has a standard of what they allow you to live on. It's called the IRS National Standard. It's kind of secret unless you know what you're doing. So if you want to know what IRS is going to allow for you, Google IRS National Standard. You will find the national standard for food and clothing, housing and utilities, car payments, and car expenses. When you fill out the IRS financial statement, whatever you put down there, IRS is going to bump out and put their expenses in set up by the Department of Labor. So that's how the hardship works. IRS is going to look at that financial statement and then determine truly if you are actually a hardship candidate. Generally, if your expenses exceed your income, IRS will put you into currently non-collectible, but understand this, they are going to go ahead and use their expenses, not yours. And if you're broke, don't worry. If you're struggling to get by, IRS is going to put you in hardship. There's no application, just so you know, there is no application for hardship. I'm the IRS Insider. I told you everything you need to know. Thank you.